Hello, everybody, and welcome to the Sales and Use Tax Regulatory Outlook and Technology Trends for 2024 webcast. That's quite the mouthful. Great thing is, we have a lot of great content for you today. My name is Chris Wiseman, and a little additional housekeeping that I want to give. They mentioned CPE. To receive credit, you have to be in attendance for at least 50 minutes, and this will be a 60-minute session. No credit will be awarded from watching a replay. There's also going to be, as it mentioned, the polling questions. Now, it says on here all of which we added a few. So you need to answer at least 3 of those polling questions that come up. So if you struggle in that first one, don't stress out. You're going to have another chance because we have more than 3 to make sure that you get those 3 that you need. Now, in the downloads, they mentioned that you could download a PDF of this. I like to point this out instead of reading this whole slide to you. If you are having struggles with the CP certificates, see that email address that says support@virtualvenues.com. You don't have to remember that. That's in that download. So if you download the PDF of this deck, you will have that information if you run into any troubles after this webinar is over and have any questions about your CPE credit. So with all the housekeeping done, let me introduce our speakers today. As I said, my name is Chris Wiseman. I am a product marketing manager at CPA.com. I oversee our tax advisory and ESG, so quite a wide breadth of services. And with me today, I have Michael Bernard, or Mike Bernard, who is VP of Tax Content and Chief Tax Officer at Vertex. And I have Keela Ross, Director of SALT at Whipley LLP. So Mike and Keela, thank you so much for joining us today. I'm looking forward to hearing your wisdom. So the reason we put this together, and if you've attended these in the past, we've done similar things every year for a couple of years. We really wanted to tap into the fact that state and local tax authorities are becoming increasingly assertive while also creating new tax bases. And we're going to talk about why. We're going to talk about how this affects you. But really, we're going to discuss, the latest legislation and litigation and how firms are leveraging technology. How are you managing these things? Now, how are we going to do that? We broke it out into 5 key areas. We are going to hit on trends in U.S. indirect tax policy. We're going to talk about Nexus updates and digital updates. We're going to then talk about audit and enforcement trends, and then automation and other technology trends. Now, while you are muted, as the video said, we do want this to be an open conversation, so please use that Q&A feature to ask questions and contribute to the discussion. We'll get to those as much as we can during the webinar, but we also can follow up with you after the webinar is over if there are any questions that we're unable to get through. So please be interactive with us. The first thing I'm going to do is a polling question. Imagine that. Why are you attending this webinar today? And while many of these may be true, we want you to select the most important reason. A, I'm interested in recent sales and use tax regulatory trends. B, I'm interested in how to better use technology to manage my sales and use tax work. C, I don't personally work in sales and use tax, but I want to stay well informed in my overall tax knowledge. Or D, I just need CPE. It's December, I need CPE, and this session sounded interesting. That is an honest and fair answer. So while we're giving people a minute to answer that polling question, Keela, Michael, I just want to welcome you both. And I'm curious, which one do you think we're going to get the most of?
Yeah, Keela, go ahead.
I would say I'm hopeful that it's A, but I would say we're going to get a number of D's because I know I need so.
We know the profession well, right? All right. So I'm going to give everybody 5 count, and then we're going to move on from the polling question. 5, 4, 3, 2, 1. Closing the polling. Okay, you guys can be happy. We had more. Now, to the 20% of you who said you just needed CPE, thank you for being honest.
Yeah.
Appreciate that. But really excited that people want to hear the regulatory trends, and I'm really excited that people want to know about tech. But I tell you what, I've been in the profession for almost 25 years, And most of it has been on the direct tax side. And so I personally am really excited about those whose sales and use tax isn't their purview, but want to make sure they are staying well-rounded in their overall tax knowledge. I personally applaud you folks, because that has been what the last year has been for me, is rounding it out here. So very excited to have all of you here. So our first section, we are going to hit that top one there, trends in U.S. indirect tax policy. And I'm going to hand it over to Keela.
Hi, first of all, I just want to thank everybody for joining today, even if it is just CPA credit needs. I know how taxing some tax webinars can be, so I hope most of you learned something. Let's talk about the recent trends within the last couple of years that have brought sales tax where it is today. The pandemic created a surge in sales tax revenue. And I know everybody's tired of hearing the word the pandemic, so I promise to only use it on this slide. But it did affect almost everything, including tax, right? Money was flowing during the pandemic. Businesses took advantage of the PPP loans that were out there, whether it was fraudulent or not. People had stimulus checks coming in to spend. States, localities, school districts also got their fair share. So due to these trends, the state budget surpluses led to cuts in various state income taxes, property taxes. I know I'm in Texas. Texas just recently rolled out a homestead exemption of $100,000, which saved, homeowners and businesses a few grand in their their property tax liability every year. Sales tax, the taxability of certain products, became non-taxable. You have food, diapers, certain hygiene items that were now considered exempt. During the pandemic, increased online transactions, which somewhat decreased brick and mortar stores. One of my favorite retail stores closed, so now I'm left to shopping online, which is fine. I've gotten used to it. Stitch Fix is one of my favorites to go to for clothes, and I guess the Whitley store. We have a shrinking of sales tax bases on TPP items. Think about the digital products that are now coming up, streaming services for movies and music. Going down, we have modernization of credit cards and digital payments and third party. Think Apple Pay and Venmo and the Cash App, right? With all that coming up, you also, thanks to the American Rescue Plan of 2021, you also now have a new filing requirement for businesses under the 1099K for anything over $600. So they're keeping track of that. Technology taxability is making things a little more complicated. Think of the Maryland case that was out there, digital advertising versus traditional. Digital advertising is taxable, traditional is not. But also think about, the software that could potentially be digital, SaaS services, information services. States are very inconsistent in this area. And we'll get into this more in later slides, but like the definitions of certain items are not consistent across the board. Next, credit incentives, funds being available for companies to expand their businesses and expand their facilities. And then also budget pressure from failing commercial property and valuations and tax cuts. Mike, I don't know if you had anything else to say, along this slide, but for the most part, we thought these were the most important items as it relates to the recent trends affecting the sales and use tax issues going on today.
No, I think you did a really good job, Keela, of covering those. But you're right. There's pressure in the property tax area. We've talked to a lot of firms around that, and they're reevaluating commercial property today. Not in the suburbs, not the homes and everything, but I think there's a tremendous amount of rework there. And obviously, property tax are a very, very important way of funding government. So, good observation there.
Mm-hmm. All right. Christina, am I clicking the next slide? Sorry, there we go. Okay, with all those recent trends, right, now that the economy is cooling off, shortfalls are appearing, states need to close the gap, on these budgets, there are things that we're expecting to see. So think of this somewhat as like, a crystal ball, but I really don't think this is a surprise to many of the folks on the call. taxation of new digital goods. Like I said, back in the day, we used to go pay $20 for a CD. Now we're paying $15 to Amazon to listen to all kinds of music, right? Photographs, streaming. Also think about the SaaS and the software that these businesses are using. There's also a lot more services out there that are getting taxed on, professional services. We already have about a handful of states right now that fully tax services, South Dakota, Hawaii being a few, but more and more states are picking what services are now taxable. So you're going to want to keep an eye on those just to continue to grow that revenue that they're falling short on. Number two, new fees are coming, and it's not really a tax. And I'll expand more a little bit on a future slide, but a lot more fees are starting to pop up that you're going to have to somewhat keep track of. Increase of locals implementing sales tax, and even the continuation of rising local sales tax. So we're talking like the cities, right? Some cities that have never issued a sales tax rate before now have sales tax rates out there. And then the ones that actually have are probably increasing them. So just a couple of things. Another thing we probably should have put on this slide were more audits, future slides coming up, and also more VDA, so more compliance work going to the states.
So a lot going on. And now that Keela's kind of started us out here with, okay, what are we digging in? I'm going to hand it over to Michael, and I want to make a comment to you all. We have a lot of slides here, and you may be wondering, oh my gosh, how are they going to get through this in the time allotted? Well, the reason is we wanted you to take home a lot more information than we knew we could give here. So as Michael and Keela start moving beyond these first two slides, you'll notice that we touch on certain topics and we don't necessarily touch on all of them. Again, great place for you in the Q&A to ask a question if we skip a bullet, because we just wanted to give you the full picture in your takeaway, download, but we're going to hit what we feel as a group were the heaviest highlights that we should really hit in this section. So Michael, I'm going to hand it over to you to talk about U.S. federal policy.
Thanks, Chris. We wanted to address U.S. federal policy because obviously this is an election year and there's some very important decisions that are going to be made by voters, both on the federal level, the state level, and obviously as it relates to ballot initiatives. So my comments over the next several slides here kind of focus around that. The reason we're focused on U.S. federal policy is obviously bullet number one. We talked a little bit about that. Number two, we don't see any kind of substantive tax policy legislation actually coming out of the federal government, which would affect the states for this coming year and calendar year 2024. Number three is important for you to all keep in mind because over the last 2 years during the Biden administration, there has been record amounts of payments made to citizens and to states. And so if you look at the ARPA, the American Recovery Protection Act, it let out almost $1.9 trillion. That was very important because that actually were the direct payments to citizens. Over 90% of households in the U.S. actually qualified for a $1,400 payment per person. And they also qualified, many for them, say in industries that were adversely affected by the pandemic, by about $300 a month as well. Then there was the Infrastructure Act, which was $1.2 trillion. So those were a bunch of improvements to roads, ports, all kinds of things that the states actually didn't have to pay. And we'll show later what that actually meant for them in terms of increasing their rainy day funds. And then lastly, the Green Act, which had not only that, but a large chunk of that was actually had to do with Medicare and drug applications. So that actually citizens were going to pay less in terms of drugs. And so all of that adds up to over $6 trillion. And then the deficit was raised by $2.5 trillion. So what all of that means is there's neither one, whoever gets the nomination and whoever runs, there's just no appetite in Congress or really amongst the presidents or presidents-elect to actually increase federal funding to states. And so states have to really start thinking about actually paying for a lot of things that they didn't have to pay for during the pandemic. And then lastly, in number four, at the end of calendar year 2025, a lot of the act that was passed under President Trump, a lot of those provisions are actually going to expire to the extent of $3.1 trillion. Okay, so the next slide is an interesting one because what happened was politically, both the Democrats and the Republicans actually got together in September of this year and said, okay, look, we've spent a lot of money. Politically, we don't want to go into the election year showing that we're not being somewhat fiscally responsible. So you can look down all of those types of payments where there's going to be some considerations. Some of you have heard about the 85,000 or 90,000 IRS agents. That's going to be reduced. There's going to be some administration work around SNAP payments. One of the more impactful things actually is the fact that students are now having to start to repay their loans, which a lot of them, when they went out and they bought a house, student loan payments were not figured in terms of debt. So there's going to be some stress among younger people there who actually have incurred some of those things. And then you can look a number of other things. The second to last one, which was on federal lands, obviously the Biden administration and gas prices went up. And there was a moratorium on leasing oil and gas on federal lands. So that's been relaxed. And then lastly, a lot of you who are on here remember the old PAYGO system, where if you wanted to offer some deduction or credit on a federal side, that you had to pay for it with an increase in tax elsewhere. And so all of that kind of is really important to reflect that. In terms of state tax revenues, I wanted to put this in front of you because I think it's important from a standpoint that as legislators start thinking about 2024, what this slide really shows, and I know it looks pretty complicated, but if you look at the gray bars that are in the middle, so those were the times of recession or pandemic. So if you can see in 2003 and 09, and then the pandemic there, what these lines really represent are the amount of revenues that fluctuated and how much they fluctuated during stressful times. And I'll just make a summary statement here, and you can look at it later and forget about the pandemic side because that's an anomaly given all the funding that came from the federal government. But as a general rule, sales taxes actually go down faster and they recover faster in economic times. So what we actually think has been our position is that sales taxes are actually going to become a more and more preferential type of tax to actually use for funding government because they normally go down about 2 quarters. They come back in 2 quarters, whereas property taxes and personal income taxes actually take more of a 6 to 8 quarter cycle. Next slide. Wanted to show you also, again, the gray bars here are during times of economic stress. So this is almost nearly a 43-year period of how rainy day funds have actually affected states. At the very end on the right-hand side, you might say, my goodness, what happened there? Well, that was, again, was the federal funding. But normally during stressful times, and we're those will be in front of us other times, normally rainy day funds, they work their way up or they work their way down slightly, but wanted to show that the current balance today it's actually quite high. That doesn't mean you're going to get a whole bunch of tax cuts and everything. It just means that the states are actually holding records amounts of cash right now. This slide here shows the rainy day funds per state. What I'll point you to is if you look to the west and you look at the ones that are in dark, so it'd be Alaska, California, North Dakota, Wyoming, and New Mexico. The reason all of those states have done very, very well is because they're based on energy. And so as the pandemic kind of came out, energy and gas and everything exploded, and they were actually were beneficiaries of that. Okay. In terms of tax cuts, so this is your heat map, okay, for 2024. So what this actually shows is that most states, not all, but most states actually provided personal income tax relief to most of their citizens, or they gave some relief, like Keila said, in Texas and places like that. They gave you an exemption for property tax. So what I would take from this one is the ones that are in the dark, the most dark, they've actually cut their taxes about as much as they want. And so if anybody is on the fence for actually giving more taxes, it's probably ones that are in the lighter colors. Okay. Next slide. Okay. Thanks, Chris.
All right. Yeah. No, that was great. I love that overview and I love the visuals. I am a visual person, so I think you could have said what you said to me 5 times, and without the visuals, it would not have sunk in nearly as much as it did. So thank you for that.
Sure.
So we have our next polling question. And again, a few of you did message in that you didn't get it clicked fast enough the first time. So go ahead and go while I'm talking. It should be up on your screen. How would you generally characterize your business clients' tax IT environment? So we're thinking about those clients that you serve, their tax department's IT environment. So A, the tax department drives their own IT roadmap and they're responsible for their funding and execution. B, there appears to be no formal roadmap at all. Clients mostly react to gaps when necessary. Oh, shoot, two of the questions were the same. That wasn't supposed to be the case. So we'll skip. I'm not going to confuse anybody by giving what the third option was supposed to be. So unsure or other is what we'll call D. And then E, it depends. You go from one client to the next, and it may be that they drive it, that somebody else drives it, which was supposed to be the other option here, that there isn't anyone driving it, or they're unsure. So we missed the somebody else drives it. That wasn't an option here. So assuming that we take that one off the table, Michael, Keela, what do you think is going to be our answer, our top answer here?
Well, Keela, I sure hope it's A. We've done some polling along the lines over the last 4 years, and if you polled tax departments 4 years ago, it was about 30%, and now today in our polling it shows it's about 65%. So we're seeing more and more of their responsibility around that. I don't know what you're seeing in your practice, though. What would you say?
I think, yes, you're right. And it really is maybe dependent on business size, right? Because you still kind of have some of those small to mid-sized companies that really may not have anything. They're getting to the larger, but definitely that I would expect the larger companies and the larger clients to have something in place already.
All right. Well, I'm going to say that we probably, just based on what you guys were talking about, I think we're going to get a lot of E, that it is a mix, partially what you were saying, partially, the tail wagging the dog, who is in charge. And I know one of the things that we talk about a lot is that tax should really have a seat at every table and often doesn't. And so trying to get more people to understand that, more companies to understand that. I'm glad to hear what you've heard, Michael. But I think there's still a ways to go. So we're going to do our 5 countdown. Make sure you click submit. 5, 4, 3, 2, 1. What do we have? All right.
Whoa.
A lot of people have the mix. Okay. And then I guess if you combine B and C here, we've got 25% there. So there doesn't appear to be a roadmap. Now, that could also be we don't find out about it until later. So maybe the firm isn't involved in those conversations with the company. That would be an interesting twist to this question for another webcast for us to do. Anything else surprise you, either of you, with this?
I think unsure surprises me. I don't know about you, Keela, but I think those are conversations that you can have maybe through reviews, quarterly reviews, or whatever. But I would want to know. I would hope that a lot of the practitioners would want to know that. I don't know, Keela. What do you think of this question?
Yeah, we do for sure. It's always a question we ask early on, like, what system are you using? Because it affects almost everything that we do. And as it relates to consulting or compliance stuff. How are we going to get the data to do the compliance? Or if they're getting audited, okay, what are you using? What do we need to look at? So it's always a good question to go in, especially if you get a new client on board, trying to figure out what they currently have in place.
Right. Exactly. All right, Mike, I'm going to pass it back to you for state ballot initiatives.
Sure. Just wanted to make a couple of comments here on state ballot initiatives. There were a number of them this in October, November. Nothing really big in terms of tax, which moves it, but we did see some things. Still a lot of voting going on in terms of guns and marijuana rights. The one thing I do want to point out is Texas actually voted down, Keela, I guess you know that because you're there, is a wealth tax. But the wealth tax is becoming more and more prevalent. Senator Warren from Massachusetts actually introduced one back in 21. And there is a wealth tax today, and it's called the estate and gift tax. When you die, they tax your wealth there or you get an exemption. but states are you're starting to see more and more of those on the ballot. So just be mindful of that approach. And in terms of 3 and 4, one thing that is of a bit concern is that a lot of times when tax statutes pass in a legislature, there is a process for citizens to actually challenge those, to say, hey, I don't want an increase in taxes here. I don't want this. Those two measures, what we're seeing more and more is the time to actually submit a ballot initiative is going down from about 6 months to 100 days. And sometimes you need a 60-40 majority before you can beat those kinds of things back. So in terms of direct democracy, you're seeing some challenges around that.
All right. Well, I'm not that wealthy, Mike, so that doesn't affect me. Well, going on to the tax, discussion here, there's things that are happening right now that are affecting businesses out there, not related to tax per se, but definitely fees, new fees. Some of you might have seen. They call them fees because they don't have to go through legislation like taxes do. So new taxes have to get voted on. Fees don't. They'll just cough it up and say, hey, this is what we're going to be doing going
Oh,
forward.
Sneaky.
Yeah. So, a couple to mention, I'm sure some of you have seen it. The Colorado and Minnesota came out with a retail delivery fee, which means anything that gets delivered into their state, any kind of tangible, taxable PPP that comes in there gets a nice delivery fee taxed onto it. Now, there are some exemptions, especially as it kind of relates to smaller retail type businesses that won't get hurt on this, but the larger ones for sure. So something to keep in mind. Colorado's came out in 2023. Minnesota's is going to be effective come next year. And you also want to kind of think about how that gets reported. Sometimes the compliance can be a little tricky depending on what system you use. Other states that have sometimes are kind of thinking about it, New York, I saw some legislation get proposed not too long ago that New York might also be thinking about this, which wouldn't surprise me. Other random local bag, fees could be local bag fees. So several states have these local bag fees, little plastic bags that you carry your groceries in that they start taxing on. That's kind of been out there for a little bit. So I do think this is kind of a trend that might be going in the future. Other states might be jumping on board for fees.
Right, especially if it can happen fast. Oh, yeah. Go ahead, Mike.
Yeah, just real quick. I just wanted to mention, Keela, you're right about all of that. Just a couple years ago, at least our company supported around 400 fee impositions, and now we're up to 1,000. And so, so it is growing exponentially.
Mm-hmm.
Wow. And well, that kind of drives us right into the next piece, which is, okay, we talked about tax, we talked about fee, but now let's go back and let's talk about Nexus updates. Again, something that I think for me, it has been clear is a confusing topic for a lot of people because just change and differences. So let's get into, Keela, some of those. What are we seeing today with Nexus?
Yeah, so Nexus, we're not much just changed since, they adopted the Wayfair decision, the economic Nexus decision about 5 years ago. I'm pretty sure 5 years from now, we'll be saying 10 years ago in the Wayfair decision. So, but with that being said, all states that have a sales tax have implemented some sort of economic nexus, and the thresholds are in place now. However, I say that there are still many businesses that are not in compliant, and I see these probably once, if not every other week, a new business coming and asking, what is economic nexus? I don't understand. So we have to have those discussions of what it is, and it's something from us to also be looking at. We may have clients that are just income tax related, but you're also going to want to start thinking about where are you selling, where do you have economic nexus in. States are becoming more aggressive in finding non-filers, right? Playtime is over, the buffer period is gone. So you're going to want to make sure that you're on top of that. Definitions, and we actually have a chart out there on our website that kind of talks about the definitions within each state of what they consider to be part of that what they consider to be help you, I guess, be part of economic nexus, right? Is it a retail sale? Is it a gross receipts? Do exempt items come into play? Do marketplace sales factor into this? Each state is different. They're not the same. It's just inconsistent. So make sure you kind of check that out, or you're focused on, if you're looking up something, make sure you're focused on the definition of a sale. Some states have continued to remove transactions, right? Louisiana just came out with it. South Dakota, I believe this is going to be a trend for other states. It's my opinion. Only because I think, maybe the states didn't think about it, but they may not be generating enough tax revenue that it was intended for, right? If you've got, $5 items and you sell $200, 200 items with the $5 items, you're not really making much sales tax revenue. It's just more administrative. Quill has not gone away. I always like to tell people Wayfair didn't replace Quill. Wayfair is an addition to Quill. So if you have physical presence in a state, you're still ultimately responsible based on the Quill decision. But if it's economic, then you're going with the Wayfair decision. So physical presence is still there. Whether it's remote employees or inventory, you need to really think about that. Even if you're traveling into certain states, and people consider that nexus too. So side note, I know from an accounting firm perspective, when we do nexus studies and people want to focus on the sales tax, we always need to look at the income tax purpose as well, right? Delaware CAT, Oregon, Ohio taxes, the Washington B&O. I mean, no matter what you're doing, you're going to want to look at these other tax types, not just sales tax, because if you start registering for sales tax, you do it, you might also be, cluing in, raising the red flag for other tax types that you're not thinking about. So, all right. Other things that we're seeing today, local taxes continue to be a challenge. These 4 states, I think I was at a conference, were ranked the lowest. And I think it's just the home rule jurisdictions that they have. Alabama seems to be a little bit better than the other few, but they're all still a little complex. Alaska doesn't have a state sales tax, but their localities are now jumping on board saying we're going to start charging city tax. So you have to kind of remember where that is. Luckily, we don't have a lot of clients in Alaska. Colorado improved their filing system, so that's a plus for them. Louisiana, there was a case that happened this year at Halstead, the Halstead Bees case that, kind of challenged Louisiana on their compliance practices. They just because they are diverse in all those different cities, they don't have a centralized audit. They've got differing tax bases between states and localities. So it just is a challenge there. Enactment of new local taxes across the country, right? Like I said earlier, there are several cities and several counties and districts that are either bringing on new city tax rates or they're increasing it. I've listed a couple here. The city of Milwaukee is now, those folks are now going to have to pay an extra, 2.5 in sales tax on their products that they're purchasing. North Dakota, I've listed those out too. But overall, there's about 125 as of today that have new taxes for the county, cities, and districts that they're laying out.
And Keila, just before we get to the polling question, one thing I would say too is we saw this a lot early in Wayfair, but I would assume you've seen this in your practice as well, is make sure that you read the statute as to how long you have sales, because sometimes you can have sales for a full year and not have to, and then you have to actually start filing, or you don't have to file, right? I assume you've seen that in your practice as well.
Oh, yeah, very much so. Each state is different, right? It's whether you hit it right there or do they give you any lag time to start registering and filing, for sure.
Yep.
Good call, Mike.
Yeah, that is good. So our last polling question, we asked, what do you think, the budgeting and how is the IT run for tax departments and your business clients? Now we're going to shift a little bit and ask, and I realize somebody messaged that they're in industry. So if you're in industry, go ahead and pick what happened for you. So if you work with somebody, with a firm to help you out with sales and use tax, or sales tax calculations, and that you can answer how this worked for you. But for those who are public firms, are you active in helping your business clients? You're understanding their needs and making introductions to providers based on those needs via official or unofficial referral methods. Are you semi-active? You meet with the client to understand the needs and you discuss with them potential providers, but then it's up to them to go work with those providers. C, are you passive? You're really not involved in helping them pick it out. You have a list, maybe, or you just say, yeah, that's not a service we provide. We don't do technology suggestions or references. Or D, is it a mix of the above based on your client base? So different clients you may have whether it's their needs, whether it's the amount of money that comes in from them, how much, extra hand holding do you give them, whatever that may be. And again, if you're in industry, pick how a firm helped you. That will work with this and give us some good information. So I see that we already have almost everybody has answered. So real quick then, I'm going to guess that D is our most common answer because it depends tends to be the most common answer if you ever give people that option. Keela, Mike, do you guys have feelings on this?
I would say D for sure. It really does depend on the client that you're trying to help. So D for me.
I agree on that. Yeah, D for me as well, probably.
All right. 5, 4, 3, 2, 1. And D. Yep. That was although we did get quite a few who said they're active. That's very cool to hear, or their firms were active with them. So that is brilliant. So thank you folks for giving us that information. Now, we do want to head on before we get to talking about audit trends in our automation. We did want to talk a little bit about digital taxes. And I know it's alluded to earlier in this presentation. So Mike, I'm going to hand it over to you.
Yeah, so we've got 2 slides here. I'll take the first slide, and then Keela has some good work that's going on at the MTC. What I wanted to do was I just wanted to break this out real quickly because when we talk about the digital economy or digital taxes, there's 2 kind of segments going here. One, which is the top one, which is a taxation or digital taxation on products, goods and services. That's clearly constitutional. I think a lot of you have seen that if you, Keela mentioned earlier about viewing some image online or video downloads. A lot of states today actually impose them just because the delivery method is different than like if you press something on a CD or something like that, or if it's a book. Obviously, those things are constitutional. So goods and services actually are being taxed, and it's actually emerging. The one that has yet to be done, as Keela mentioned it earlier, was about Maryland, whether you can tax certain companies who are with very high threshold in terms of sales, and you can tax digital advertising on their platforms and call that out versus the states versus someplace like Maryland, which doesn't tax traditional forms of media such as papers or radio or print or anything like that. So Maryland is yet to be determined. There's states waiting in line to actually see what happens in Maryland. That case is actually not going forward in federal court because it actually is going to spend another year in Maryland state court. So just wanted to point that out. And then I think, Keela, you've got some good thoughts moving forward of where we're going.
Yeah, definitely. So, like Mike mentioned, there are several states that tax digital products. However, those states may not have updated their definitions for several years. Maybe going back to 20 years. So what we would consider digital today may not have been digital back then. So the MTC, the Multi-State Tax Commission, created a project started back in 2021 that would essentially define what certain digital products are to help states turn around and make decisions on, okay, do we want to tax these or do we not want to tax these? I think the business community, because they pay such a large amount in tax liability related to like SaaS products and softwares, that they needed this. So they were putting pressure on the states to come up with something. So MTC, like I said, is coming down, working together pretty regularly. I see meetings on the calendar every month to come together. Right now, I've seen a couple of drafts as it relates to a white paper of what definitions should be for several digital type products. So, just thinking out loud, crystal ball again, we're thinking that maybe this should come out probably mid to 2024. But like Mike mentioned earlier, we don't think any legislation is going to happen on it until after the election. So probably come 2025. So just so you know, we're hoping that the states, most states really rely on what they come up with so they can turn around and propose legislation. So we're hoping it gets a little bit more consistent across the board of what certain things are, how they're defined, and, should they be taxable.
And Keela, one thing I did want to point out with the MTC, and I know you know this as well, but just I think it's good for our listeners to remember is after the Wayfair decision, there was no model act around marketplace facilitators, right? So the MTC actually working with the National Council of State Legislators actually drafted and put out a model act around marketplaces. And I think you would agree that even though there's differences in how states adopted that model act, it still led to some pretty uniform taxation responsibilities. Wouldn't you agree with that? So this is good going on too. So
Yep.
And that I was thinking along the same lines, and I think it leads in very nicely to us talking about, okay, really good to have standards so that you know what's going to happen in an audit. I think that just ties in so nicely, and we definitely have seen some audit trends. Keela, you already hinted to it, like states are getting more aggressive about this. So I'm going to pass it over to you to keep talking about the increase in audits.
Yeah, definitely. So, like I said, Wayfair happened 5 years ago. Now's about the time, the statute limitations, 3 to 4 years, where maybe we can actually get some stuff out of these audits. States now have more resources to do the audits, whether it's internal or they're hiring the third-party firms. I know the state of Texas has about 6,000 audits that are sitting there that are open, but I don't know if their personnel is sticking around long enough to do them. So states are still happening virtually, the audits are, and some people still want to go on site, but I think it's a lot easier to get through virtually. More classifications of products and or services, right? So this kind of leads, goes back to the last slide we were talking about, the NTC, we need definitions because they're different in every state. So on SaaS, information services, professional service, just more clarity. So there's a lot of back and forth on, when it comes to audits. Using analytics, states are getting more analytical when it comes to picking and choosing who they go after an audit, right? They're looking at prior audits, what seemed to be more fruitful, right? Looking at the industry that they're in, the revenue that they pull in. They're also talking to different departments. I'm sure you've heard that where, they registered for payroll, so they've got physical nexus. Maybe why aren't they filing for sales tax? What's happening there? So they're using different resources there. Remote employees, like I said, they're registering for a payroll. We've got nexus triggers here. Auditors are more accepting of audit tax configurations after performing minimal transactions tests. And that really means, because more and more businesses are going, bringing on more technology solutions, that audits don't have to be based by receipt and, every receipt that comes in. They can review a few, but then actually go back to the technology stack and review that just to make sure that the process is right and it's in place. And I'm going to give a shout out to my friend Diane that said, audit my tax engine configuration, not my transaction. So I know she kind of stands on that one. So I just wanted to throw that out there. Also, consumer use audit, this isn't new. This is stuff that's been going on. I know we see it on our side too. We've got a lot of clients that don't report consumer use tax. And so it's something that they always jump on, and there's always a nice size liability when you get the figures at the end of the day. But I will say, make sure you review all of their findings. A lot of times they're incorrect. So make sure you fine tooth comb it and make sure that they match up with what you've got going on. Next, to maybe help your clients not get audited or, be better off, there are some things you can do to be proactive, especially when you've got new clients that didn't really know they had to file sales and use tax right. Most states offer voluntary disclosure agreements or have some sort of amnesty program for you to join into to get them compliant. For the most part, VDAs offer like a limited look back. They eliminate the risk, prior to the look back. It reduces liabilities. And I say that from a respect of prior to the VDA look back, usually there's a settlement and they're not going to go back and audit that side. A waiver of penalties. There's a few states that offer a waiver of interest, but not very many. So you're probably still on the hook for that. Make sure you look into the criteria of the eligibility. Each state is different, right? If you're currently in an audit, you're not going to be eligible for a VDA. If you received an inquiry notice, you may not be eligible for that. And, if you've already been registered and filing, it's hit or miss on some of these states. Now, to be efficient, the Multi-State Tax Commission, the MTC, came out with a BDA type option for businesses if they've got liabilities in several states to go forth and do it through them. But there are some drawbacks to that. One, because not all states are involved with this. So you may still have to kind of do some with states directly, but then the others you can do with the MTC. The look back period, like I said, is about 3 to 4 years for them. Now they will not register the company after the BDA is complete. You are still on the hook to do that. Whereas if you were doing it directly with the state, you could probably get that knocked out with them too. So other areas to look into just to, save on risk and possibly money, looking at those reseller certificates, making sure those are in place, not expired. Does your client qualify? Manufacturing and research and development exemptions. Now, just a side note on that, if you're going to look into that and that's maybe what your business or your company, your client qualifies for, double check those every once in a while. Sometimes the criteria around those change. So just keep an eye, keep looking at those every once in a while just to make sure your client still fits. So Mike, anything that I might have missed? Go ahead.
Yeah, just two quick questions. One is, in terms of expectations, when you've seen, and I've been in VDAs also, but obviously there's tax, there's interest, there's penalties sometimes. And so what have you normally seen? Do they just want the tax or the interest? They're willing to waive the penalties? Kind of what have you seen, or is it just all over the board?
Well, I would say for the most part, they definitely want the tax. And they will waive the penalty on the VDAs, but the interest, like I said, there's maybe only a few states that waive interest. So for the most part, you're kind of on the hook for the interest as well. Okay.
Mm-hmm. And because interest has been climbing, obviously now that's going to be higher. So if folks want to get in there just on even if there's not a formal program, I think we would normally encourage people to go in there. The service providers could actually go in there and maybe negotiate something. Wouldn't you agree with that?
Yeah, for sure. Yep. Just to get them compliant. Mm-hmm.
Yep. And that leads into the polling question. So well done. Nice transition. Yeah. Do you currently have sales and use tax software in place in your firm? Yes. And we're happy? Yes. But we're looking at other options. No. And we are looking at options, or no, we outsource. We don't need this ourselves. Be honest, but I am hoping that, we're looking at one of the first three for most people. But I think to your point of the audit my process, audit my technology, don't audit my individual transactions. I think that makes a lot of sense. And so a lot of people might be going, how is my setup? I think that might be an open question here. Mike starts laughing. Mm-hmm. But I think that might be an open question for people. Like, am I comfortable? Would I be comfortable telling an auditor to come audit my tech stack and my process? While we wait here for a second, give everybody a chance. Don't forget, select your option and hit submit to get this in. Any other thoughts on what you think people might be thinking about right now?
I hope they're selecting A. I mean, actually, to actually be compliant in this area, it's part of the governance model for finance groups, and obviously taxes in the finance group. So I hope they're paying attention to those things.
Yeah, me too. All right, guys, we're going to do our countdown. 5, 4, 3, 2, 1, and... Okay, a lot of people said they don't need any, and that might be you're having somebody else manage. It'd be really interesting if you want to even give us some insight into that in the Q&A, we'd love to hear it. But yeah, beyond that, it's, we're happy, which is good. And people are looking. So I hope that this webinar, for those of you, the 21% who said you're looking, and the 6% who said you have something and you're looking at other options, I hope we've been giving you some really good information to think about. And that leads us right into the next area. So for all of you who said that you're looking, keep on listening as we finish up our webinar here with automation and other tech trends. Now, this slide gives you some good Wikipedia definitions of things you might hear. you're going to hear about automation. You're going to hear about generative AI or chat GPT. I mean, we know this, right? RPA, that may be a term that you, or an acronym that you've heard and not known what it is, robotic process automation, edge computing. And yeah, I've been around the everything's on a mainframe, everything goes back to being decentralized and on your machines. Now everything's cloud. Okay, but now maybe a distributed kind of somewhere between it's on my local machine and it's on the cloud of edge computing. So we've seen technology over the decades go back and forth on this concept. And we have this slide here to give you some information. This is one of those slides I don't want to spend a lot of time on, though. And the reason why, and Keela's laughing because she and I have had deep conversations about this. While I may have started my career and have spent my career really focused on tech, I have a saying, tech for tech's sake is dumb. Just doing tech for tech's sake doesn't help anybody. However, if you know what you need and then go get the right tech, that is when you can really advance yourself. And so this next slide, and we won't go through every question here, obviously, but this next slide, Keela, I want to ask you to hit a few of these. These are the kinds of conversations you need to be having internally or with your clients so you can decide what tech you need.
Yeah, like we mentioned a few slides back, you should be talking to your clients on what they need, or talking to them every once in a while just to figure out what they're into now. But if you got a new client, and like I said, these are some of the questions we ask our clients when they first come on board. What do you need? What's going on with your business? Are you growing? Are you selling new products? What's happening here? Definitely keep it open. Let them just spill it all out what they want. What are your goals in the next 2 to 5 years? I really think this is one of the most important ones, because if they tell you what they need right now, the quick fix may not answer what they need in 2 to 5 years, right? If they're going to invest money and time to get something operational and going to fix what they've got going on today, it may not work for them in 3 to 5 years. So you're just really going to want to talk about their goals. Where do they see themselves? Growth plan, same thing, advanced questions, what are your challenges? What problems are you having? And then, who will lead this project? You talk to everybody. You always need that champion, right, to lead the product, because the last thing you want is to, okay, you're going to get this done, and then not have a go-to person, or not have a person in here that may know a little bit about it but haven't talked to everybody. I mean, this is a lesson learned that I, over the years have done. So just a few questions there, triggering this tax debt conversation too. I always talk to vendors about pricing models. Don't look at one, maybe look at several to see what works for them. Every client is different. Every client has a budget. Every client may not need the top best thing. It may just need something that's going to work for them. Once again, IT budget situation. Chris, I'm not going to go into the other ones, but Mike, maybe any thoughts there?
I say, Mike, you want to add anything before I move on?
Yeah, just one quick thing. I would say I definitely agree with you, Keela. Like, whatever you build, make sure you build it for your business. You just don't go out and benchmark stuff. So I agree with that 100%. The other thing too is you have to have like a plan and a roadmap. And a lot of times tax departments can draft that. IT can help you with that. If you have an internal department, you can. The service providers that we have here today, you can help draft part of that. So it's not just kind of a one fix all, but if you have a vision of where you want to go and what your governance model is, and you want to meet that, you really have to commit that to paper and then really socialize it within your finance department and the CFO.
Absolutely. Absolutely. So I hope that helped those who had that last name. I'm going to jump right into our final polling question, but we just wanted to end this with, hey, what are your next steps and what are your resources? Here we go. We're just going to ask you, and then we'll chat a little bit more here. Do any of these apply to you? And you can check all that apply. Do you want to have a discussion with Vertex, where Mike comes from, regarding a partnership program that we have with them to help you work with your business clients? Would you like to talk with Keela, who is leading up sales and use tax matters with Whipfleet, especially, those who maybe aren't doing, I think if I remember right, that first question, we had 17% of people who don't work in this area but just want to stay around it. Are you looking to partner with somebody or want to talk to somebody who does run? We absolutely can give your information over to Keela. Neither. not interested in either one, that's completely acceptable too, folks. So while I give people a chance to answer this final one, I'm going to ask Mike and Keela both, if you had to tell people one takeaway, one piece of advice, ending the year here and ending our webinar, what would it be?
Do you want to go first,
Keela,
Mike?
you want to go first?
Okay, I'll go. I would say you don't have to know everything, right, when it comes to sales and use tax, but partner up with folks that can help you get there. I know I don't know everything, but I've got several folks in the network, Mike and Vertex, I can easily reach out to who would probably know the answer. So don't put that pressure on yourself. Reach out, build a network, anybody that can help in the area. So
great advice.
Yeah, I guess the one thing I would say to everybody is, and I mentioned it just a few minutes ago, was make sure you have a plan. And I don't care if it's 1 page or 2 pages of what you think your governance model should be around your transaction taxes, because the problem with sales tax that you can run into is if you're selling to consumers, you either have to have good exemption certificate management around a lot of those sales if they're exempt, or if they're taxable, like that you're actually getting that correct. Because if you don't, it can lead to issues with consumers on short paying and those kinds of things. So just really kind of take a look at, like, if your compliance is good and your governance controls are good, congratulations. If they need improvement, start working on that as you go along.
Perfect. All right, folks. 5, 4, 3, 2, 1. The poll is closed. We're going to end today by reminding you the states are going to continue to be aggressive. Audits are going to keep increasing. Remember, look at all of your tax types with Nexus Studies. Help clients manage their tax risk, especially around technology-related transactions. We can't overemphasize the need for having these proactive discussions. Be compliant, be practical, and be vigilant. With that, some people did ask us if we had resources. We gave you 3 simple places to go that you can get a lot of different really good resources from Vertex, from the AICPA, and from Wipfli. And we want to thank everybody for taking time in your busy holiday season to meet with us and have this great discussion. And again, I'm going to thank Mike and Keela for joining us today. This was wonderful. Everybody have a wonderful rest of your day.